के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top business stories. A second rate hike in 5 weeks. The Monetary Policy Committee increases repo rate by 50 basis points. That's in line with expectations. The MPC also voted unanimously to focus on withdrawal of accommodation to tame rising inflation. RBI expects CPI to remain well above 6% target until at least the end of the year, raises its FY23 inflation forecast by 100 basis points, projects inflation at 6.7% for the full year. RBI retains GDP growth forecast at 7.2%. RBI allows linking credit cards with UPI platform. RuPay credit card will get the facility first. Also expands e-mandate limit for recurring payments via credit and debit cards to 15,000 rupees. Market extends losing run to fourth straight day as the RBI hints at more rate hikes to tackle inflation. Sensex ends 215 points lower, Nifty below 16,400. The rupee ends at a record closing low against the US dollar. Government hikes minimum support price for 17 kharif crops. This move will provide assured remunerative prices to the farmers. The cabinet hikes paddy MSP by 100 rupees to 2,040 rupees per quintal for the 2022-23 crop year.
The MPC voted unanimously to increase the policy repo rate by 50 basis points. In extremely volatile and uncertain conditions, we just cannot give any forward guidance. The real GDP growth for 2022-23, that is for the current year, is retained at 7.2%.
The Reserve Bank of India has zeroed in on inflation as its enemy number one, jacking up the benchmark repo rate by half a percentage point to 4.9%. This is the second increase in less than 5 weeks and will translate to your loan EMIs increasing again in probably the next fortnight.
The war in Europe is lingering and we are facing newer challenges each passing day, which is accentuating the existing supply chain disruptions. As a result, food, energy, and commodity prices remain elevated.
The agenda was clear in the first 30 seconds of the RBI governor's policy statement. Inflation is the millstone weighing the heaviest around the central bank's neck. To control the spiraling prices, the Monetary Policy Committee of RBI unanimously decided to hike repo rates by 50 basis points to 4.90%, making the money more expensive for those looking to borrow, effectively reducing the supply of cheap money in the market. However, RBI has been forced to concede that the present inflation is more determined. The central bank has raised its inflation estimate for 2022 to 2023 to 6.7% from the earlier 5.7%, saying that 3/4 of the increase was attributed to rise in food prices. He also warned that inflation will remain above RBI's upper target of 6% for at least the first 3 quarters of this financial year. The rate is expected to moderate to 5.8% in January to March 2023.
Inflationary pressures have become broad-based and remain largely driven by adverse supply shocks. There are growing signs of a higher pass-through of input costs to selling prices. The MPC noted that inflation is likely to remain above the upper tolerance band of 6% through the first 3 quarters of the current financial year, that is 22-23.
The RBI governor also warned of global challenges to the Indian economy, listing out negative spills from geopolitical tensions, elevated international commodity prices, rising input costs, tightening of global financial conditions, and a general slowdown in the world economy as big retardants. Shaktikant Das, however, remains confident of the Indian business panorama.
Our surveys suggest further improvement in consumer confidence and households' optimism for the outlook a year ahead. Business sentiment remains upbeat according to early results of our surveys.
The RBI has kept the GDP growth estimate for the current financial year unchanged at 7.2%. This growth rate forecast is, however, expected to fall each subsequent quarter, a clear indication that the economy is not anywhere out of the woods yet. Bureau Report, Business Today Television.
Our managing editor Siddharth Zarabi joining us now for his take on the RBI's announcements today. Rolling back their accommodative stance, Siddharth, very significant from both a market and economy perspective.
Well, you know, the best way that I can at least describe what the RBI has done today is to tell all of India that inflation will remain elevated beyond its 6% upper end target for the next 6 months. And afterwards, in January, February, March, there is a likelihood that it will slip below that, but just by about 30 basis points. So effectively, the rest of the current financial year is a year where the RBI will roll back, as you put it, and reach a pre-COVID interest rate environment. However, since growth is a concern, and the bank's ability to lend and keep that side of the economy going, the RBI has made appropriate adjustments and accommodations, if I may put it that way. The second major thing is the RBI has also told all of us that the inflation build-up, 3/4 of that is happening on account of food prices. Now, food prices are extremely politically sensitive in India, and as the rest of the world, the Western world is also learning, they are sensitive, and that puts some amount of pressure on the government of India. And I would end by saying, Abha, that the RBI governor's clear-cut statement, in as direct as a RBI governor can speak, about the states' need to cut the taxes that they levy on petrol and diesel, is a headline statement, because if the states were to do that, that will immediately lead into a decrease in the headline number. Because remember, the RBI has now shifted, after some amount of criticism, from being completely accommodative for growth to becoming an inflation warrior. But today the governor has, in a way, prepared all of us that there are limitations to even the RBI's ability and the effectiveness of interest rate hikes in controlling inflation, which is largely driven by food. So interesting 6, 8, 9 months that are going to play out. Be prepared for extension of EMI tenures, like you said, and money is not going to get cheaper anytime soon. And in fact, for an even better take, we are joined now by no one else but the chairman of India's largest bank, Dinesh Kumar Khara, the chairman of the State Bank of India. Mr. Khara, thank you very much for joining us here on Business Today. The question that everyone wants to know is, the RBI has now, for the second time in a short period of time, hiked the repo rate, and it will get passed on in some format. Your thoughts on what you will do as a bank, and whether it will be effective in controlling the inflation monster that we seem to be grappling with.
Yeah, I think if we really look at it, the inflation risk which were flagged in April and May resolutions of the MPC, they have actually now materialized if we look at the inflation numbers. So which means that this is something, inflation, of course, we keep on saying that it has become a global phenomena. So, and since the economy is coupled with the globe, so naturally it gets imported into the economy. So, and I think in such a situation when RBI is supposed to really ensure that the growth is maintained in the economy, and at the same time the orderliness remains in the economy, perhaps this was warranted. And also it may not be out of place to mention that inflation trajectory across the globe is still not really receding. This is something essentially attributed to geopolitical tensions. So naturally, in such a situation, there is a need for a calibrated monetary policy action. And in that context, I would say that inflation expectation has more or less got anchored, and there is adequate restraint as far as the pressures on the prices are concerned. So I think that that's the context in which this kind of a policy has been announced by RBI.
Before I go across to my colleague Abha, a quick follow-up, sir. What does this mean for State Bank of India customers? And you have such a large customer base. Are you going to hike the lending rate and perhaps the savings rate as well?
No, I think we'll have to, we'll actually be going through the data in our ALCO, and once we have a clear visibility in terms of the trend on the ground, then perhaps we'll be taking a call. Having said that, I would also like to mention that still there is excess liquidity in the system, and that is perhaps the reason why perhaps the way the interest rates are quoted may not be really transferring the full increase in the repo rate. But nevertheless, there are other loan contracts which are linked to the variable interest rate benchmarks, which could be MCLRs, which could be EBLR, which could be repo rate, etc. So for such loan contracts, it will lead to an increase in interest rates. But as far as contracting new contracts are concerned, there, apart from the base or maybe the benchmark, there would be some kind of a risk premium, which also is a function of the excess liquidity with each of the bank. So I think we'll have to perhaps wait and watch for the ALCO to meet, and then we will be in a position to take some calls.
Okay. Mr. Khara, how much of an impact is this move going to have on inflation, given that what we're really seeing is a spiraling on food prices? I know you talked about the wider factors at play, but you know, how much really can monetary policy at this point play a role in containing the root of inflation?
Well, as far as this is one of the conventional tools which is available, and this was the point of time when we had seen excess liquidity in the system across the globe, and that was something which had started impacting. So it was naturally, you know, that had led to a situation where perhaps increasing of the repo rate will probably be in a position to take care of the excess liquidity part in the system. So that is something which has been done. So how much of it will be help in containing the inflation? Probably. The other very important aspect for inflation is the kind of a capacity which is available. We still have very decent capacity which is available. Our capacity utilization in the economy has improved to up to 74.5%, but still about 25% of the capacity is available to be tapped. So I think supply side constraints I don't perceive much. So, and also when it comes to rural economy, we are expecting a normal monsoon. So if at all, that is the kind of a situation from when it comes to the crops, we are expecting decent crop, and that will probably take care of the food inflation part of it. So I think, to my mind, still the major risk is essentially coming from the imports of the crude as well as the edible oil. But lot many steps have been taken by Government of India in terms of rationalizing the duty structures and also the taxes. So that is also mitigating part of the impact of the global price rise on these commodities.
Mr. Khara, I want to ask you about the linkage of with credit cards as far as the UPI system is concerned. But before I do that, I want to once again on behalf of India Today viewers ask you, what happens to those who hold fixed deposits or planning to put in some fixed deposits? Can they expect better returns following the RBI's moves?
Again, this will be a subject matter of discussion in our ALCO, wherein we will be reviewing the position of different maturities. So when it comes to the existing fixed deposit holders, they will, I mean, as per the contract, they will continue to earn the interest rate at which they have contracted that fixed deposit. But as far as fresh fixed deposits would be concerned, they would be according to the new rates, and the new rates also will depend upon the kind of asset liability position is concerned with each of the bank. And we started increasing our deposit rates for certain maturities. We have increased it in the last ALCO meeting. So we'll be taking very conscious call to ensure that our overall cost of resources remains within range, and it should not adversely impact our NIM. So that is, we need to do fine balancing always. So that is something which we will do.
Mr. Kara, could you also explain how this move initially for RuPay credit cards will play out? People are asking this question, that does it mean that small payments that we make through UPI can now be linked to credit cards, and instead of directly paying from the bank account, you can earn a window of 30 days of interest-free credit?
Yeah, certainly. I think it's a very welcome move which has happened. And to start with, it is RuPay cards has been offered. They can be used for UPI payments too. So I think it's a very welcome step. Maybe going forward, maybe we might get to see it happening with the other cards also, Visa, Master also.
All right. Mr. Kara, the governor also indicated that there would be a continued rate hikes, at least another one before the year is out. What's your overall perspective when you kind of look at how things are going to shape up over the next few months in terms of both inflation and growth, given that monetary policy is already talking about being far less accommodative?
I think perhaps we'll have to wait and watch for how really the growth pans out, how the excess liquidity in the system gets absorbed. So I think those will be the factors which will be eventually impacting on the broad macro data, which will be very, very carefully looked into before any policy decisions are taken. So we'll be very closely watching the situation, and it's too early to really indicate for, as a bank, it is too early to really predict any kind of a interest rate trajectory going forward.
Okay. We have been hearing, of course, that on the corporate side, there still hasn't been too much of a change in terms of capacity expansion plans and so forth. Do you see any significant implications when it comes to capex and the plans of corporates, in light of the rising rates, at least in the second half of the year?
So actually, the way I have seen the behavior of the corporates, they look at the demand. If at all demand is there, then perhaps this may not have any much of impact on their investment plans. So that's how I interpret how the corporates evaluate the situation in the economy. So I think, and overall also, we have looked at it that large corporates have deleveraged their balance sheet quite a lot. So there is hardly any interest cost for them. But if at all they are in a position to see the demand, I think it will be a time when perhaps they will be investing for adding the new capacities also. In the current financial year, we have seen the traction in that direction. And I expect to see it going forward, provided there's a strong demand. And if you look around, the economy is still, as per the RBI projections, also is expected to grow at 7.2%, and perhaps one of the very few large economies where this kind of a growth will be seen in the current year. So I think to that extent, we have a reasonably decent chances to see investment from the private sector also coming, though government will continue to take the lead in terms of supporting the investment climate in the country.
All right, Mr. Khara, great having you with us. Thank you for taking out the time on the day of the policy and talking to us about some of the implications going forward. Dinesh Khara, Chairman SBI, with us here on Business Today.
Thank you. Thank you very much.
Thank you very much.
Well, that's the big story that we are bringing you today. We're going to take a very quick break on that note. Back with more news from the business world on the other side.
Separated by family, reunited by the High Court.
Hello and welcome to Unfiltered. I'm Akshita Nandagopal, and this week we're going to be talking about how love trumps all and it always wins. This is the story of two girls in Kerala, Adila and Fatima, who were truly, madly and deeply in love, but had to overcome all of the issues that they faced from society. Adila and Fatima have been in love since their college days in Saudi Arabia. And when they came out to their parents about their relationship, it was completely opposed. Both their parents weren't on board. What followed was a fight to prove that their love can withstand all possible challenges. They faced emotional blackmail, they faced court cases, they faced mental harassment. They tried to overcome all of it together.
Actually, it was very tough. It was very it made me emotionally drained, and I was very lost.
Circumstances forced them to even leave their home, and they moved to a shelter home where they then thought that they'd be able to continue their lives without any problems. But then Fatima's family decided to pull her out. They took her physically out of the shelter home, away from Adila. And that's when Adila decided that she's not going to give up. She decided to move the court for justice. She filed a habeas corpus petition, and guess what? She won.
Actually, at first I would like to thank the Kerala High Court for its order in favor of us. Then I would like to thank the
Welcome back. You're with us here on Business Today, and we are decoding the RBI policy for you and the implications that this will have on growth going forward. Joining us now, Chief Economist at Yes Bank, Indranil Pan. Indranil, great to have you with us. Give us first your take on the policy. We were expecting that 50 bips hike, but coming so soon and with indicators that there may yet be further hikes in the offing. How much of an impact is this going to have on the economy?
Well, our own expectation was 35, even though 50 didn't shock us. Having said that, I think the clear indication in the policy is that the main focus continues to be inflation. And more significantly, the increase in the inflation target that RBI has, 75% of that is through food. So my understanding is that there is a serious risk of inflation expectations getting unhedged, which necessarily means that the RBI had to be front-footed in terms of rate increases, and hence the 50 basis points on top of the 40 basis points that you got. Our sense is that obviously a no-brainer in terms of how the policy journey is ahead, which is basically hikes only. The critical sort of debate can only be in terms of the pace and when they would possibly want to stop. My sense is, given that the RBI's own assessment is for a 5.8% average for the fourth quarter, they would want to possibly take it as close to that as possible before actually pausing. By that time, we will have a much clearer indication in terms of how global growth is panning out, how global central banks are behaving with respect to interest rate increases, and what implication the India's policy interest rate increase will have on growth going forward. So my bet is that December is the last policy when you see a hike, and at that point in time, we should see close to 580 or even 6% in terms of the repo rate.
And as RBI hikes interest rates to rein in inflation, Economic Affairs Secretary Ajay Seth says that monetary and fiscal authorities are moving in tandem to moderate inflation and push growth at the same time. Listen in.
Reserve Bank of India has taken the steps which are needed for the economy, and as we have noted in the past since morning, and there are domestic challenges and more are larger ones are there in the global scenario. So these actions are a combination of that. So whatever it takes for monetary authorities as well as fiscal authorities, those actions are being taken. The entire effort is that we manage to moderate the inflation, at the same time keep the growth story or the growth efforts as earlier.
All the big news and analysis from the much anticipated RBI monetary policy meet. That's all from us on the show today. Thanks so much for watching.
We are prepared for anything North Korea does. We've thought through how we respond to whatever they do, and so I'm not concerned if that's what you suggest.
The US and South Korea did not shy away from showing their joint military prowess, launching 8 ballistic missiles into the sea as a reply to North Korean military provocations. The firing exercise lasted for 10 minutes, and the firings took place from South Korea's eastern waters. The missile drill was to show that the US and South Korea can respond swiftly and accurately. Earlier, North Korea had triggered the face-off by firing 8 short-range missiles over 35 minutes from at least 4 different locations. This would mark North Korea's 18th round of missile tests this year alone. The joint test firing comes right after President Biden returned from his South Korea visit, and it will be the first such joint drill between the two countries since 2017. Military intimidations from North Korea are far from new, and neither is North Korea